volume. In this video, we are going to be talking about a tradable volume pattern, or how to use volume with a couple setups, how I use volume to be more profitable, be more precise. And volume is not something that I've talked about a lot or given a lot of analysis on. I don't think I've given almost any analysis on, but I found I've been using it more and more. And I think part of trading is when you start out, you're looking at everything, and as you get better, you look at less things. And then as you get better, you start to look at a lot of things again, because you have more confluences, you have more edges, you have more control over yourself. As you trade more, like, you don't want to be extremely simple. You don't want to be an algo that people can just copy. You want to, for me, like, I'm trading liquidations, I'm trading stop losses, yeah, but I want to know where the 50 EMA is, I want to know where the 200 EMA is, I want to know where the major trend lines are, I want to know what market structure is, I want to know what the fib levels look like, and there's certain things I'm looking for on volume as well. And there's other things as well. So, bear with me a moment as I charge my phone. Almost went overboard there. Okay, so we're going to be talking about volume in the context of trading reversals and continuation, but continuation comes from saying this isn't a reversal, right? Volume on reversal patterns. So my thesis, and I believe this to be true, and you can look and you can confirm it for yourself, but typically the highest point of a move and the lowest point of a move have a tremendous volume. So if you note that there was tremendous volume and price pivoted, there's increased odds that that was a tradable bottom or a tradable top. If price reversed, but it was not on high volume, then it increases the odds that this was not a tradable top or bottom. Furthermore, if you're in a trade, it gives you a possible signal to hold for continuation or to exit based on there was the volume top, there's the volume bottom. So I find I'm doing this more and more, and it's also the only thing that I'm trading on a lower time frame. So, because I'm trading the daily chart, I'm trading 4 hour and 1 hour zones, but I want to see on the 5 minute and on the 1 minute that volume come on a big wick. So we're going to be more precise and specific about how to trade that, but first a little bit of theory. So what is volume? Volume is, and I'm only trading Bitcoin and ETH, but it's the number of coins that are being traded on a particular time. Now, there's other sorts of volume you can look at, volume by price, volume profiles. I'm interested in traditional volume at time, and in this case, I'm interested in volume at time at the very highest and the very lowest candle. So when it comes to reversal, the theory is, and this is observable to be true, is typically, and not always, but typically, it takes a tremendous amount of volume to shift from a bull to a bear trend, or to shift from a bear trend to a bull trend. So when we go from a prolonged bull trend to a prolonged bear trend, typically it's not because you ran out of buyers. It's because the sellers stepped in and overwhelmed the buyers. So there's a huge amount of buying and selling that's happening, and it shows up as volume on the chart. Similarly, at a market bottom, it's not because people stopped selling, it's because the buyers overwhelm the sellers, and there's a huge amount of volume on the chart of lots of buying and selling. This isn't always true, it's just an edge that gives increased probability, right? So volume, there's generally four types of things that are happening, four types of transactions and orders that are happening on the volume of these tops and bottoms. First, you have stop losses, right? At a top of the market, shorts are getting stopped out. People were short, they say it's extended, it can't go higher. It went higher, and now they're getting stopped out. At the bottom, people are buying. They're saying this is the bottom. It's not going to go lower, and now it's going lower, and they're forced to sell. They're forced to buy. Also, you have stock market orders, which are breakout and breakdowns. People are saying, if we get past this point, we're going to go a lot further. Like, we're breaking out. These aren't all stock market orders, but also market orders. People FOMO buying the top because we're going to go farther. People fear selling the bottom because we're going to go lower, right? We have so much momentum to the downside, I'm going to sell. We have so much momentum to the upside, I'm going to buy. Market stop break. So that is another type of order that's coming in that is generating this volume. Now we also have TPs. A lot of TPs are going to be going off. So the market went up and it cleared the high. A lot of people who were long from lower, they put their TP right at the high. Now they're selling. People who, when we get to a major bottom, we hit a new low. Say we hit a new low. We hit a new low. There are people who are short from higher. They set their target at that low, and now they're selling, right? And then the last one would be limit reversals, right? These are people who say, and this is typically how I trade, if we make a new low, I'm buying, and I'm doing it with a limit order. If we make a new high, I'm selling. I'm doing it with a limit order. If price comes up here, I'm selling. If price comes down here, I'm buying. So in these tops and bottoms, typically all of these things are happening at once, and it shows up as a huge amount of volume on the chart, right? A lot of people are going long. Like, stop losses are getting triggered at the highs. Stop losses are getting triggered. People are being forced to sell. They hate that they have to, people are being forced to buy. They hate that they have to buy, but they're buying. People are breaking out. Breakout traders stepping in either at the market or the stock market is going long. People who are long from lower are taking profit because price is flying higher. They got in lower. They're going to take their profit. We're hitting new highs. People who, and also a lot of times this is whales. People are opening new short positions. They're selling because there's, especially the larger whales, because there's a lot of counterparties to sell to them, and there's people who are being forced to sell to them. There's a lot of volume to sell into as well. So typically, a top bottom has all four of these things, and if it doesn't have all four of these things, it's often not a top or bottom. If people are not getting stopped out, I mean, it can be missing one, right? If it's missing even one, it's probably not a tradable top or bottom. If it's not a major TP, if people aren't getting stopped out, if it's not an area where people are going to put limit reverses, if it's not an area where people are going to consider breakouts. So specifically what I'm looking for is, I'm looking for area, before we get to volume, I'm looking for areas where there's going to be a lot of stop losses and there's going to be a lot of take profits. Okay, and then I'm going to put a limit reverse there with the expectation that whales are also going to put a limit reverse there. So let's draw like just a price chart. Okay, so we have, say we have, let's use a different color. I'm going to use orange. Okay, let's give an example now. So we start a bear trend. We come into a consolidation area, right? I'm interested in trading both ways on Bitcoin and ETH. I know that probably doesn't show up super well, so let me actually redo this with purple or blue so you can see it better. So, okay, we have a high, low, higher, lower high, lower low, going into a consolidation. I know that in this area right here, there's going to be a lot of stop losses. Also in this area, and also in this area. So I also know that people who are scalping this range, they're going to take profit here, they're going to take profit here. I also know that there's stop losses up here. I also know that this is a major take profit. So these are different areas where I'm interested in putting a limit order. So I'm generally trading reversals. It's more common for the markets to range than to trend. Or, the ranges typically last longer than the trends. Ideally, I can trade the trends by holding the range break. Typically, I'm not looking to enter on trend just because, according to my data, it doesn't work as well as these reversals do. But again, based on volume, I can maybe say that this was or wasn't a top, right? So I'm interested in setting limit orders in here. Two setups. The first one is sweep into gap, where there's going to be stop losses here. There's going to be take profit here. There's a gap here. I'm going to put my limit entry somewhere in here with my stop further away. So I'm gonna maybe have a long here and a short here at the same time. I'm not going to trade in this range. I'm going to wait for the range to break and then trade in the other direction. Usually there's a false move on Bitcoin or ETH that might look like the false move, sweep into this gap, and then we have a breakdown. So I'm doing two trade setups. The first one is this. The second one is maybe I didn't have a limit in here because I had a limit in here. I thought price would go up to here, but it's starting to reject and it's displacing down. It's creating a 1 hour gap right in here. Created a 1 hour gap, and then I'm going to try to jump in on a minor retracement to sell. So there's two things that I'm looking for in terms of volume to help me here. So let's wipe this off so we can spend a little bit more time on the charts. But my expectation is I'm going to limit where I expect there to be a huge amount of volume. If there's not a huge amount of volume, then the trade's less likely to work out, and I could consider exiting earlier. Break even, at a loss, at a win, or whatever. But if I didn't get the volume I was expecting, then that's a clue to get out of the trade early. On the other hand, if I'm expecting price to go to an area, but it rejects or bounces before there, and it's on massive volume, that could tell me that that's a tradable pivot, and I can use my other setup. The first setup is predicting there's going to be the first setup is predicting there's going to be a sweep here. The second setup is saying I think that was the sweep, right? The first is predicting a pivot reversal. The second one is saying I think that was the pivot reversal. So let's give an example. So price, say here's a similar setup. I'll do a bullish scenario here where price is coming up, higher high, higher low, higher high, into a consolidation sideways for days, right? I am looking to trade here, and I'm also looking to trade here under this, and then I'm also looking to trade here. I expect all three of these areas to be high volume areas, okay? Based on, there's going to be a lot of stop losses here. People who shorted are going to take profit here. There's going to be a lot of limit orders here, and people are going to try to trade a breakdown as well. So I may set a limit order here, and say price comes into here and fills my limit order. What I want to see is it to wick aggressively on high volume. Now I'm going to go into the 5 minute, right? Here, let's say we go to a lower time frame chart, and there's a wick like this. Okay, I want the volume to look like this. This is what I'm looking for. If the volume, I want the volume to be extremely high, unusually high, not just unusually high. On the 5 minute and the 1 minute, it should be the highest point of the move. It should be the highest volume since the last pivot. This should be the highest volume since the last high, this low. Now, this tells me that I'm correct here and I can hold the position. It also tells me that maybe I didn't trade this, again, because I was expecting lower, maybe I didn't get filled. But price is leaving, maybe as it expands, it leaves a little gap here. Usually price doesn't move in a straight line. I can go long here because I'm seeing this crazy volume and I'm going to get filled and price is going to move up. Now, on the other hand, let's say price has done this, but the highest volume was here. It wasn't super high, and it wasn't particularly high volume on the very low. And maybe like the high up here, maybe the high looked like this for volume. This would suggest to me that this is not the bottom, because there wasn't huge volume, which means we didn't have a huge amount of buyers step in. We didn't have a huge amount of stop losses triggered. We didn't have a lot of people shorting the breakdown, and we didn't have a lot of people taking profit here. So this suggests to me that if I got filled on this, then I should maybe consider, especially if I didn't get a strong reaction, what if the reaction's even weaker? Like, it's the lowest point and we're drifting higher, but it wasn't a huge reaction and it wasn't huge volume. I can exit this early and say, I don't think this trade is going to work now. I predicted there was going to be a huge volume here, and it didn't happen. So it's more likely to break down now. And then maybe the real bottom will be over here when there's huge volume, right? The other thing is, if price is reversing right here, and I didn't expect it to, but it's reversing on low volume, then it's not a tradable setup for me. In order for this to be a tradable setup, it needs to be huge volume on the 5 minute and the 1 minute. The low on the 1 minute and the 5 minute need to be the highest volume of the whole move, and ideally since the last pivot. And so if I don't get that, one, it's not tradable, and two, it's holdable as a continuation. If I went short up here, I want to hold until we have reversal on huge volume. And I'm going to target an area where I expect there to be huge volume reversal. But if that happens early, then I'm going to get out. And if price is moving towards my target and it's reversing on me, but on a low volume, then I should run my stops wide and let the trade play out. So this is what I'm looking at in volume. I'm finding it to be the third most important indicator for me. The first is daily highs and lows. The second is fair value gaps. The third is volume on the 5 minute and 1 minute. I want daily highs and lows, 4 hour and 1 hour gaps, 5 minute and 1 minute volume. Makes sense. So I want to see price break a daily high or break a daily low, which is a major target, reverse. At the very highest point, there's huge volume. At the very lowest point, there was huge volume. It's expanding in a way that's leaving a fair value gap. That to me, either I guessed there's going to be high volume, I'm going to enter here. If there isn't high volume, and especially if there's not high volume nor a convincing reversal, I'm out of the trade. Take a small loss, take a small win, take a break even, I'm out. I can enter on a retracement to these gaps. If price wants to reverse before I thought it would or before I set limit orders, and it's reversing on high volume, and it's expanding so much it's leaving gaps on the 1 hour or 4 hour, then that's a tradable setup. So those are, and if I'm holding and price is reversing but on a low volume, then I expect it to just be a regular retracement and not a tradable market top or bottom. So volume is important because the very tops and bottoms of move tend to be extremely high volume because it takes a huge amount of volume to move from a bearish to a bullish market. It takes a huge amount of volume to move from a bullish to a bearish market because we need stops to be triggered and breakout traders to enter to create enough volume for the whales to want to step in on the other side with limit orders. And also, if everybody's taking profit there, it also increases the odds that we're going to have a major, or at least a tradable move. So I want to see that the very highest 1 minute of the move, the very highest low minute of the move was the highest volume. It should be a big wick too. So that's how I'm using volume, and that's one way that you can use volume. There's other ways to use volume, but for me, that's the marker of the thing that I was waiting for has happened. Either I'm in the trade or I'm not, and now I'm. It happened or didn't happen. So hope you found that useful and interesting. If you do, leave a comment. And happy trading. Much love. Peace.